For your real life and real future, Tom and Don are talking real money.
Welcome to the Talking Real Money multicast, combocast, podcast, videocast, blog, vlog, whatever you want to call it. We'll just make stuff up until you find something you like, because we do this for you. I'm Don McDonald here in the Florida studio, and of course, Tom has fled back to the Pacific Northwest, where the weather's more amenable to him. He likes the rain.
Freezing to death.
And the
And
cold.
yeah, speaking of which, Tom, who's the guy who
Tom?
called in this last weekend and called me your assistant?
Did somebody call you my assistant?
Yeah, he said, sorry, your assistant isn't here. Well,
Oh,
we're
I
having
like that.
technical problems. Yeah,
I
so
like
was
that.
I want your number, dude.
I like that. Thank you, sir. Whoever you are, thank you. Thank you so much.
Wow.
It's people like you that make life worth living. Makes me want to get up in the morning.
Exactly.
So,
Ouch.
Guy Friday.
What time would
servant.
you like your tea, sir?
I've been thinking. Actually, if you could head down to Starbucks and get me a nice latte, that'd be.
Would you like extra sugar or milk? In
No.
that, sir?
A little, light foam.
Light foam?
Light
Very
foam,
good, sir.
Yeah.
We'll have it
and
back
the
in
venti.
40
I want the
seconds.
venti.
You got it.
Okay. Hey, now I forgot what we're going to talk about. Oh, I know what we're going to talk about today. Oh, my gosh. The Wall Street Journal just named its, what do they call their little thing? The winner's circle. The winner's circle of mutual funds.
Yeah. So every quarter they look back over the previous year to tell you the top performing mutual funds.
I'm sorry, I'm just
Whole 1 year
moaning. performance.
1 year performance. You really
Yeah.
gotta know this.
Oh, and you know that 1 year performance means so much. This year's winner is a small cap value fund. Now, I'm betting you did not get into this fund a year ago. And I'm going to tell you why I'm betting you didn't get into it a year ago. But the fund is called Aegis Fund, the Aegis Value Fund. Right?
It's managed by Mr. Barbie. That's 2 E's.
Ken
not
Barbie.
I-E. Just saying. Just
Ken Barbie.
putting it
that
out
would
there.
that would be a great name. Almost as funny as Donald McDonald. Ken Barbie.
Well, it kind of works though. Yeah.
Or Tom.
Yeah. Let's leave it at that.
Just leaving it there. So, anyway, this fund has a 1.5% annual expense ratio. It's got a portfolio of fewer than 60 stocks, heavily concentrated in just one industry, Tom.
I think it's like lumber or something, or
It's
commodities.
it's commodities. It's
Yeah,
commodities.
okay, yeah. Which
Which
shock you to know has had a good run here.
but
I mean, the asset class itself has done pretty well. Yeah.
was it brilliance or was it luck? Is it live or is it Memorex?
Well, are you overweighted to International Petroleum or Resolute Forest Products or Amerigo Resources? Are you overweight?
I've never
to
even
those?
heard of Amerigo Resources, but I'm pretty sure it's probably in the Vanguard Total World Stock Index Fund, right?
I bet you own it. Yeah.
I bet I
By the
do.
way, the last time Mr. Barbie was featured in the Journal's quarterly survey was 2016. Guess what? He made a bet on gold mining stocks then that made him a lot of money and pushed him into the winner's circle.
And here's what happens is a fund like this has incredible years followed by relative mediocrity. The last time he won was when, Tom?
2016.
Yeah, his return for 2016 was 70.71%. 70.71 in a year when small cap value, which is where he is categorized, was up by about 27%.
So he's real smart.
Real smart, or what's the other possibility that people
when
don't
you go
like?
to the casino and you roll the dice, or you put
What?
it on black and it comes up black.
Because the funny
Lucky.
thing is, in 2014, his fund lost 26%.
Oh,
In 2015, the fund lost 24%.
ouch.
So what I did was I did some interesting little research here. I went back to 2020 to see if anyone recommended the Aegis Value Fund as the next hot fund for 2021. And I looked everywhere. I looked everywhere. And what I found, it was interesting. The one fund that kept popping up over and over and over again as the likely hot fund for 2021, I bet
ARC.
you knew it. Gosh, you're
Oh, I'm
good.
so smart.
ARC was
Because it,
picked to be the hot fund of 2021.
because it made
ARKK.
150% the year before, or whatever it was. You don't
Right,
have to be a
right.
genius
That
there.
is the deal. This
Ugh.
is so right now, what people are doing, because this came out in the Wall Street Journal on Monday,
Mm-hmm.
is thousands of people are going out and buying Mr. Barbie's fund. And the likelihood is it likely that they're going to enjoy the same incredible success in 2023 as they enjoyed so far in 2021 and 2022, Tom?
No, and there's been a lot of work done on this topic about buying the thing, buying the fund, buying the fund manager's work that has been hot. Mark Holpert's done some terrific work on this. I think he still writes a little bit for Market Watch, but he doesn't do his newsletter work the way he used to. But he used to look at the newsletter with the best performance one
Mhm.
year, next year, traditionally in the lower end. And the same holds true because what happened here is a very few stocks in a very small asset class in a relatively small fund. Bingo, big money. I mean, and by the way, if you want the real demo on that, the more highly publicized, of course, would be Kathy Smith over at ARC. So we know what has been hot recently is usually the worst place to invest from that. Number two, short-term performance. I got to scold the Wall Street Journal. I think you are a little bit here, but a little bit more because
Okay.
this is a very silly exercise. I know they got to fill the pages, and I read it, but this is
People love this
really.
stuff,
I
though.
know it's just really. It's this, and again, what happens is not unlike the portfolio that you and I looked at earlier today is people end up with a portfolio of the series of ideas because they heard I got to be in with Mr. Barbie or Ms. Barbie. No, I was kidding. Mr. Barbie because his fund has been hot. So they end up buying all these little things instead of here's the way you should pick funds. You decide on the overall asset allocation first, how much in stocks, how much in bonds. Then on the stock side, you say, I got to own the world. What's the best way to do that? Well, you could buy a series of exchange traded funds at exceedingly low cost. What his is 1.5%? Is that what you said?
1.5% per year. That's correct.
That's
Whereas the
insanity.
Vanguard Small Cap Value Index Fund, which is VISVX,
Right.
I use the investors, so I had the history. The price on that, and it's even lower for the ETF or the Admiral shares, is 0.19.
So it's 0.19 or
1.5,
1.50.
so 8 times more expensive.
Oh, I mean, it's
And
so
and and
wrong.
this is what
Yeah.
we all miss in this whole thing because nobody analyzes these and nobody really looks at the truth of the claims that they're outperforming. Yeah, sure they're outperforming. But why? It's usually one of two things. It's either luck, pure luck, or the fund manager takes greater risk. And in the case of Aegis Value, we don't know how to quantify luck really, but we can quantify risk with a thing called standard deviation. The standard deviation of the Vanguard Small Cap Value Index
Yep. Which
for
is
over
risky
10
fun.
years, pretty
Yeah.
risky,
Yep.
about 17%.
Okay.
The
So
higher if
fairly high.
something
Yeah.
doesn't fluctuate at all, it has a standard deviation of 0, just so you understand.
Correct.
0.
Yep.
17.51%. The standard deviation for the Aegis Value Fund is almost 26%
Wow.
over
That
that
is
same period.
way, way, way
That
high.
is
Yeah.
dramatically higher. Dramatic. So, yeah, you would expect to make more because you're taking greater risk. But over time, that 1.5% fee, it's going to eat down your extra returns. And they're going to come out, they'll probably in the long run you'll end up with a little bit better, maybe, but you're going to suffer much, much bigger, much, much more frightening swings along the way. And I want to add one more thing, Tom, because
Yes.
this comes out every 6 months. I love this study. It's very scientific, done by a reputable company by the name of Standard & Poor's. Probably heard of them. They have this index. They have lots of indexes. They own almost all the big indexes now. They do what is called their SPIVA report. S&P indexes versus active. I looked at the latest one.
Active mutual funds.
Right, active mutual funds. Correct. I looked at the latest SPIVA report card for 2021, and these numbers are fascinating. Over 3 years, this is on a risk-adjusted level, because remember, a lot of these funds take more risk. On a risk-adjusted basis, 80% of all actively managed U.S. mutual funds, 80% over 3 years, underperform the comparable index. And they use the same indexes. They match asset classes. They don't just say against the S&P 500. It's against the appropriate index for that fund.
Correct. Yeah.
5 years.
This would be matched against U.S.
small cap value.
Yeah.
Mm-hmm. 5 year, 81%. But here's where it gets interesting. This is where luck comes into play. Because over 3 or 5 years, you can get lucky. People have streaks at the casino. But at 10 years, this is where the chaff gets shaken out of the wheat. 93% fail to beat their appropriate index. And at 20 years, 95%. What are your odds of success? Underperform the index. 95% fail to beat the index for all that extra money they charge.
You got to be really smart to pick those ahead of time. So my suggestion on the winner's circle is don't play the loser's game by trying to be part of it.
Oh, that was clever.
Thank you.
He went for clever today. Ooh. Sometimes he goes for clever and he hits it. That was pretty close. Sometimes I don't know.
You were still giving me trouble with the Rasputin joke, and even my 14-year-old daughter understood that one.
Your 14-year-old daughter is smarter than the average bear. Plus, she lives with you, and you do talk a lot about ancient Russian history. Well, not ancient. 100 years ago. 100 years ago. A little over 100 years ago.
Yeah, okay. Look it up.
But I honestly think, honestly, you've watched those things on late night television where the late night TV hosts or they get somebody to go out in the street and go, "Who's the president?" Clinton.
Of what? Yeah, right. Yeah.
Who was the president of the United States in the first years of the country? Who was the very first president of the United States? Yeah. Abraham Lincoln. You know.
Yes, I know our sad lack of education, but I will.
So nobody knows. They don't teach Rasputin.
I like that line so much. I'm going to the next time somebody says the 60-40 portfolio is dead, I will use that line again. Count on it. I only have 3 or 4, as Don knows, having known.
This is a sad day on Talking Real Money.
I'm sorry to be that guy. You got a quick question here?
You want one? All right.
Sure,
I'm
why
just
not?
trying to find you one here.
Now that I drug Rasputin into all this, may as well do something else.
All right, here we go.
Yep.
I think this is a good one. I don't think we've done this one. No, we haven't done this one before. Hi, guys. I'm currently in my mid-30s. I have a 401k and a TDF. And, of course, what does the smart aleck say right after that?
What?
Not Templeton Dragon Fund.
Oh, we're never going to live that one down, I don't think.
No, I don't think so. And a portion in small cap. Oh, it sounds like the Paul Merriman portfolio, doesn't it?
The target date and okay.
Looking at me and my spouse's Roth IRA, we put in the max per year. 2 questions. First, I've come across some ETTs labeled as momentum ETFs, such as MTUM. Oh, I think he meant ETFs, not ETTs.
I believe he did. Yeah.
Yeah, because that's the iShares Momentum Factor ETF.
I know the fund.
I do too. I do. I know the fund.
Yeah. We know
is there any place for this sort of fund in our portfolio? I also hear you talk about small cap value ETFs. As me and my wife do not plan on retiring anytime soon, would it be advantageous to be in a small cap growth ETF? Curious on your thoughts, and I enjoy the podcast.
Yes, on the small cap. Absolutely.
Yeah,
I
he
like
has
that
small cap,
strategy.
and I
Yeah.
think that should probably even be small cap value
Here's the
rather than
struggle I
just
have.
broad
Yeah.
small cap.
We use the momentum, but we use it in a very small way. We use it professionally managed. It gets rebalanced when it needs to. I don't think, honestly, there's no offense to do-it-yourselfers, that if you're a do-it-yourselfer, that's a fund for you.
Well, what happens is there are a number of factors, and that's what they're
Yep.
called.
Mm-hmm.
Factors that have shown some potential for increasing returns based on the past. And momentum means that a stock, and this happens, stocks get hot and they tend to stay hot for a while just based on that momentum, the fact that people are following the crowd. As a matter of fact, perfect example, the Aegis Fund. I bet it's going to get some momentum for a little while.
Count on it. Yeah.
But one of the problems with momentum and why you don't want it to be a major part of your portfolio is it is difficult to judge when the momentum runs out. There are people who believe they have a formula for that, but these are relatively new factors, and you don't want to. If you throw all of the potential factors into a portfolio, it can get ponderous to manage, which is why it really should. It's like,
don't
okay,
try
here, I'll
this
give you a
at
great
home.
analogy. I'll give you a great analogy. You get a splinter buried in your finger. Go ahead, get a pair of tweezers and some alcohol and clean that thing out, right?
Yep.
You get an entire tree limb shoved through your abdomen, go to the hospital.
That's good. I just watched the end of Uhtred last night, so that's perfect time.
Did he get a tree limb stuck through his abdomen?
Yeah, there was one right at the end there. Yeah, it didn't look
okay.
Good,
I didn't even watch that. So
not Uhtred, but somebody else. I think that's a good analogy. There's a depth of understanding and work that goes into using funds like this, and I'm not sure. Again, I don't want this to sound insulting. It's not that you can't. I wouldn't do this if I was doing it on my own. I'll put it that way.
Well, because you're butting up against a couple of things. One, you're butting up against the complexity of it. Just getting it right and the timing and the rebalancing, and not timing as in market timing, but you're being in the appropriate stuff and the appropriate portfolios and the appropriate parts of it. You got to factor in all this stuff. Plus, there's the more things you have in your portfolio, the more difficult it becomes to constrain your emotions, because you start looking at those. This is a human habit. You look at the pieces, not the whole. And that's why you need a professional going, it's like, remember all the conversations we've had about bonds? You remember those? Where we kind of have to get you back. We have to kind of grab you and pull you back on track because you're going, why do I have these stupid bonds in my portfolio? Get me out of these bonds. I hate these bonds. No. You don't often know what's best for you.
Father knows best. No, I think that's a very good way to put it, because there's other factors that I'm not sure that a do-it-yourself investor should be adding to their portfolio. I'll put it that way.
And that's what Rasputin was trying to convince the Tsar and Tsarina of back in his day too. That he was trying to guide them in the right spiritual
Poison,
direction.
hanging, stabbing, shooting, whatever else they were.
Go look him up if you don't know. That's now Tom's second reference to Rasputin in a single week.
Yeah. Okay. Well, I'll work my way to another.
Can you work on a new historical reference?
Religious figure. So
yeah,
sure.
New historical reference, not World War II.
Oh, that's a shame.
No, you gotta delve deeper. Go medieval. Whoa. Go medieval on us.
Uhtred is as medieval as I get, and I don't think he's a real person. So that's a little early medieval.
No, but the time. I mean, the kings and all were.
That's true. That's true.
He's talking about the Last Kingdom. Right?
Yes. I finally watched the end of it. Thank goodness.
Don't tell me I haven't seen the end of it. I love the Last Kingdom. Then I learned
there's going to be a movie or something. It never ends. Uhtred lives 1,000 lives. How he does it. And he's been in 8,000 sword fights. Obviously very talented. Doesn't the guy ever just a stray hit here? Anyway, so good for him.
All right. We got to go.
All
we're
right.
We're out of time.
Silly references.
Thanks. Good. Thanks for being here. Thanks for listening to our podcast. Thanks for occasionally, but not nearly often enough, sharing our stuff on your social media. Share us on social media, please. And subscribe on YouTube. Where are we at? Where are we at on YouTube? Where are we at? I got to look.
Believe it or not, we're closing in on 900.
We're not over 900.
We get to 1,000, we're going to have a party, dude. We're going to have just massive. I'm going to stay up till like 9:30.
And it'll be recorded
be
live. Oh, no, dude. Hey. You were so wrong.
Uh-huh.
We are at 934 subscribers.
Ooh,
for Talking Real Money.
More quickly than we thought.
So we just need 66
please
more.
Please.
All right. We want those today. So go. All
right.
All right. Thanks for being there. I'm Don. That's Tom. We hang out all the time, literally almost every day, talking real money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial product or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?